What's up? What's up, investors? Starting soon. What's up? What's up, Travis?
What's up, man? How you doing?
I'm good. What about you?
I'm well. Are you still on vacation?
Yeah, all the way until middle January. I'll be here in Colombia.
What? No way. That long?
No, it's not kind of vacation. It is kind of like what I'm kind of working remotely, so I guess why not?
Damn, bro. That's cool. So do you still live in Canada or not?
Yes, still live
Okay.
in Canada, just here for my wife's relatives, basically, to
Oh,
celebrate with them, yeah, Christmas and New Year, and because we haven't seen them for like 1.5 years already.
shit. So she's from down there?
She's what?
She's from Colombia?
Yes, she is.
Oh. I had one of my best friends in high school, and we ended up working together, and we went to the same college too. We didn't have classes. We didn't study together in college, but he's Colombian. He's from Bogota.
Yes, she's Cartagena. She's from Cartagena, in the
Cool.
coast, basically. Yeah,
Sweet.
so yeah, basically escaped the Canadian winter for at least 1 month. Still working, still doing Patreon, Instagram, YouTube. A little bit less than usual, especially on YouTube. Like in Canada, I was doing 15 videos per week. Here it's at least 10. So,
Cool,
so,
man. That's
so
sweet. I love how you get to escape the cold because Canada gets pretty crazy this time of year.
yeah, it was cold. It was colder than last year, at least, definitely. So let's see. The worst thing will be when we are coming back, because we will be like get used to warmth, get used to hot weather. So it will be very easy to get sick, basically. And in these times, if you are getting sick, it's like it's nothing than the Yorona, basically. so so let's see. We will take extra caution, and we'll be need to stay at home for 2 weeks. So hopefully it's gonna be not a big deal. We got some like no frozen food, like canned food for the first like 1 week or so, and then we might just order with the delivery. So let's see, to avoid going out and stuff.
Right,
So,
right.
so
Cool,
far
man.
so good. Cool DJing. I saw you, like I was using you on the background and doing some YouTube editing. Cool DJing.
Thank you, friend. Thank you. That was a good
Yeah,
time.
I saw it. Yeah, good. Okay, so I guess that's as always just the two of us. It's gonna be chill today because 1 week before the new year and everything like this and that. And next week, unfortunately, again, I will not be able to do the meeting because next week we are going to town in Colombia basically, and there will be no internet. So unfortunately, I don't think I will ever be even on Instagram. I don't think I'll ever be doing like Patreon or something. So unfortunately, next week I'll be silent. But yeah, let's see. Will be recording videos like and stuff like this and that, but nothing about the project. Nice camera. Yeah, you're muted, by the way. What about?
Thank you. I got a Canon, and I just did some product shots for a website that I'm working on. So I'm gonna dump the footage while you're doing the presentation.
Okay. Oh, Gabriel joined. Nice.
Oh, sweet. Cool, Gabe.
Awesome. Then it's just that it's the three of us. Gabriel, you are just in time. I hope you're still hearing us. Okay, so Gabriel, you're just in time. We are just like small talking. I'm still in Colombia. Well, you know it. So far, so good. How's Canada, by the way?
Colder than Colombia.
I assume it is. So yeah, Colombia so far so good. Warm, hot. We'll see how it goes when we come back, because you know, changes in climate, changes in temperature, it's very easy to get sick and everything. But we will be needed to be in quarantine for like a couple of weeks, so we'll just stay at home. Hopefully we will not get sick or anything like this, and then we'll do ice skating. Hopefully the weather stays cold, so we can do ice skating.
I'm sure you will enjoy it while you're there, though. That sounds awesome.
We do. Sweating a lot. Being Russian Canadian, it's unbelievable. Like, I don't know if you're watching my YouTube videos, but like my kind of branded hoodie is yellow, like actual yellow hoodie. And I am recording videos in this hoodie here in Colombia, and this is just, you can imagine, basically. It's like plus 32, plus 33, and I'm in hoodie, and I need to record, like, you know, I'm recording in batches. My videos are like 2-3 minutes long, so it doesn't make sense to me to record one video. So I record like 7-8 videos per like one sitting. So I'm sitting in hoodie in plus 33 for like 1 hour, 1.5, like up to 2 hours. It's pretty hot. Okay, so yes, everyone just in time. Everyone who's interested joined. Everyone else will be watching the replay. And today is a very important topic, basically like everyone else, every other topics, but today is especially important because today we're going to speak about the mindset of investing. And it is definitely, I would say, in my own opinion and in many other investors' opinion, that the mindset is even more important than anything else combined. Okay, let me just start sharing my screen as soon as I start the presentation. So photos here. Okay, so like I said, today's topic is the mindset of an investor. And in my opinion, it is one of the most important, if not the most important thing about successful investing. Okay, and these are the quick topics for today, which you've seen probably in Instagram. I shared them. If not, then here you go. The mindset of the stock market, how to think like an investor, how not to think like an investor, long-term profit versus short-term gains, how to react when prices go up or down, next Teslas, and then if there are any questions, I will be answering them basically. And the idea of the presentation is basically the same. I will be going through the slides, and while I'm in full screen, for some reason there is no notifications from Zoom coming. So just in case, if you have any questions during me showing a slide or talking, if you have a question, just type it in the chat. I will answer in between slides. Or if the question is urgent, you're worried you're gonna forget it or something, just use your microphone, interrupt me, ask the question, and I'll answer. Okay, so the first thing is the mindset on the stock market. No one joined, no questions, obviously. So let's begin. Okay, so the mindset on the stock market. The mindset is everything. It is more important, like I said, to have a proper mindset than to have a financial background. And I'm talking about any kinds of financial backgrounds. If you ever invested or not, if you are from accounting, if you're from finances, if you are anything like dealing with finances, personal finances, corporate finances, it's irrelevant as long as you don't have proper mindset. The mindset is responsible for at least, I would say, more than half of success on basically in investing. Or and this is what I'm talking about, if you're investing in individual companies. But if you're investing in ETFs, like for example, like we've been talking about VOO, which is S&P 500 ETF, or VTI, which is total stock market ETF. In this case, the mindset is literally 90-95% of success. So as you can see, it is very important to have proper mindset. For this reason, today's presentation is very, very good, basically, to understand. And it's not going to have any numbers, any financial terms, nothing like this. So you will understand today completely everything, at least I hope so. Okay, so your investment analysis can be perfect. It can be absolutely precise. Your assumptions, your predictions can be like cent to cent. You can predict that the price of AT&T is going to be $49.36, and it will be, for example, $49.36. But if your mindset is not correct, if you do not have the right mindset, you can still lose money no matter what. And achieving and maintaining proper mindset is extremely complicated, but once you get it, it is very hard to think otherwise, basically. Like, because you know that this is how it works, this is how it's supposed to work, this is time-proven strategy. So why would you change anything? As long as you can achieve and maintain the mindset, the proper mindset, that's all it takes to be at least like 50-60% successful in investing. And like I said, if you're investing in ETFs, that's basically all you need is the proper mindset. Okay. Oh, Gabriel rejoined, looks like. Okay, Gabriel, I see you rejoined. I hope you didn't miss a lot from the first slide. So hopefully you didn't. If you did, you can just watch the replay on YouTube. I will be uploading this on YouTube like always. Unfortunately, I just cannot say it again because time limit, 45 minutes or something like this for the Zoom.
No problem. Thanks so much.
Yes, but long story short, yeah, I can summarize previously really quick that mindset on the stock market is everything. It is very important to have proper mindset. Mindset is more important than proper financial investment analysis. Mindset is responsible for 50-60% of success in investing. If you're investing in individual companies, like if you're picking Microsoft, Google, Facebook, Tesla, no stuff like this and that. But if you're investing in ETFs like VOO or VTI, the proper mindset is responsible for at least, I would say, 90+% of success. Because like if you have ETF, you technically do not even need to invest in individual companies. Like that's it. Like VTI is total stock market ETF. It means that you are invested in every single company on the stock market. So that's it. You just need to have proper mindset and you'll be successful. And achieving and maintaining this mindset is very hard. But once you get it, it is very hard to start thinking otherwise. So once you get it, that's all that matters basically. Okay. So this was just very quick summary. Like I said, on YouTube video, it will be a little bit more details. Okay. The next thing is how to think like an investor. You need to invest in a company that you are ready to stay with for decades if necessary. So for example, like you see, I don't know, Apple, Microsoft and stuff like this, you see that you are ready to invest in this company. You did some kind of analysis, proper or improper analysis, like at least something. And you know that you can stay with Apple no matter how its price going up and down like crazy. But if you think that this company is doing good, that you think that has good future perspectives, and you think that this will be like this for at least next 5-10 years, this is the way you need to think about before investing in a company. You cannot think about investing in a company that I'll just invest in it right now, and as soon as something, I don't know, like bad happens, like something insignificant happens, or as soon as the price goes down, I'll just get rid of it so to save my money. No, this is not the way an investor thinks. You need to be investing in a company that you are comfortable holding for decades. For this reason, normal, classic, real investors, they do not invest in failing companies. Whoever invests in failing companies, it's either those people who want to profit in short term, like short sellers, traders, and all this kind of stuff, like those people who like can profit basically from any state of the market, either it going up or down. But as an investor, you need to park your money in a safe place, in a place that you know that will exist and you know that will grow and you will grow with it. And sometimes big profits take time to show themselves. Like, for example, right now, for me, this is my cruise line and airline companies. And these are the companies that I'm holding since, I would say, I think May. And I know that not in the nearest future, they're not going to be as good as they used to be, especially cruise line companies. Airline companies, they started flying, maybe the planes are like at half capacity or stuff like this. But as far as I remember, all the major cruise line companies are completely banned, prohibited. Like you cannot do a cruise, you cannot go on the cruise with the cruise line, with the Carnival Cruise Line, for example. And I am ready for this company to start taking people on cruises, basically, to start making money. And I'm ready to hold it for years. How long it takes? 1, 2, 3 years, because whenever I was investing in it, I saw that it has decent amount of cash reserves and it can survive for several years, I think, without needing to even make profit, to need revenue and everything. It has enough cash reserves to just be as is right now. Of course, the sooner they start making money, the better, like because none of the companies are safe from going bankrupt, for example, yes? But I cannot imagine a future where there will be 0 cruise line companies in the world. Eventually, yes, some of them will go bankrupt if this thing will last for another couple of years. Eventually, yes, but I cannot imagine like when the pandemic is over, there will be no cruises in the world. I just cannot imagine this. The same with the airline companies. So for this reason, I selected the one which I selected the company with the biggest potential of staying alive and invest in it, and that's it. I'm just waiting. There was one day when Carnival got like 20 or 30% in one day. It's good, but I know that it can potentially grow even more. That's why I didn't sell it, didn't fix the profits or anything like this. I'm just still invested in it and I'm just waiting. That's it. When you're an investor, you need to aim for compound interest, not short-term gains. And compound interest, it takes years to start working for you. Basically, what's compound interest? When you have $1,000 invested and 10% growth per year, this is 10% of 1,000. This is $100. Not that much. Many people do not invest because they do not want to log their $1,000 just to make $100 in 1 year. It's just not worth for them. But whenever later, like 10, 15, 20 years from now, your portfolio is $100,000, the same 10%, it's already $10,000. So this is what's compound interest. You just need to invest. Slow things, they add up. Small things, they add up. And eventually they become massive. Like it's like a snowball effect. So, I know, Gabriel, you're in Canada, and I'm thinking you already were making like snowmen or anything like this. So, in the beginning, whenever you have a snowball, it's very small. So you're like roll, you keep rolling, you roll it, and it's like it's very slow. It grows slow, but as soon as it's already big snowball, just one complete turn, and it's already like way like much bigger, let's say. So you get that. It's like snowball effect. And if you're an investor, you need to diversify across sectors. You need to invest in ETFs. You cannot be an investor and invest only in like, I don't know, one Tesla or like one Apple or like Google and Facebook. I don't know. You need to be diversified across sectors. Because just in case, usually sectors, they tend to go more or less in the same direction. So for example, we have, I don't know, like Facebook, like not Facebook, like I don't know, Apple and Samsung, I don't know, Microsoft. Yes, technological sector, long story short. And as soon as technological sector starts going up, more or less, generally speaking, all the major companies from technological sector are going in the same direction. And when technological sector starts going down, usually it's because all the major companies, they are going down in the same technological sector. For this reason, you need to be diversified. There are some industries that struggle the least whenever it's like a decline in the markets, like for example, energy sector, and how it's called, like utility sector, like these two, and I think basic materials, if I'm not mistaken. These three sectors are the ones who suffer the least from like pandemics, from the crashes, from recessions, from corrections and stuff like this. So for example, when your technological sector companies are falling 20% per month, these companies can fall like, I don't know, 5% or like 1%, or even grow like a couple of percent more, which means that it balances out. So your whole portfolio does not lose the whole 20% at once. Instead, it loses way less than if you've been just invested in one sector. So you need to diversify, or at least just invest in an ETF. VTI, VOO, both of them are great options. It's either thousands of companies or 500 companies, and they are already well diversified across different sectors. So this is more than enough to invest in just one single ETF. Okay. Let's see. Okay, no questions. So I guess we can continue. How not to think like an investor. You cannot be considered an investor if you are thinking about selling stocks as soon as they bring you money. You cannot invest in Apple and buy like shares at $120 per share. And as soon as it reaches 122, you're selling it, making profit of $2 per share. And that's it. Like it's not investing, it's trading. You just profit from prices going up and down in this case. But as an investor, you need to grow with the company, you need to stay with the company, you need to achieve compound interest. So you are investing in a company and you want to make this company grow with you. You are giving your money to this company, so this company uses this money to do marketing, to do research and development, to improve products, to penetrate new markets, I don't know, stuff like this and that. You're not giving money to just get it back as soon as it makes more money. Investing is about giving money and expecting this money to be put to a good use by a company's management. You are giving them your money for this company to grow so that you grow with this company. Also, if you're checking your portfolio every hour, every 15 minutes to see how your investments are doing, it's also not investing. The best analogy is with the houses, like mortgages, for example. Yes, buying a house is also some kind of an investment. It is an actual real estate investment. Like you buy a house, and eventually, most likely, it's either you or your kids or your grandkids, whoever will be living in this house. Most likely, eventually, this house will be sold. So, and this house will be sold most likely for higher price than you bought it for, especially if this house is going to be your family house for decades. Right now, you bought it for $500,000. 15 years from now is going to be $800,000, for example. Okay. So this is also an investment. And once you bought your house, you do not go on the same website where you bought it from. I don't know, Zillow or something like this. I think it's one of the most popular in America, or Kijiji in Canada. You don't go on this website and you don't check how much your house is worth every single hour. You bought your house and you live in it. That's it. You take care of it. You grow your kids. You grow old. You just live in there. You don't care about, because that's it. It's your asset. You live in it. You don't check. You bought your house for $500,000, and then, for example, you check your house price, and now it's $480,000, and you're like telling to your, I don't know, wife or husband, let's sell the house. We already lost 20,000. What if it goes lower? No, you don't do things like this. You just live in it because it's your asset. You need it. Like you just need it. That's it. It's your asset. Because this is your investment. You're not flipping houses. You're not trading houses prices. You invested in this house, and eventually later you're going to sell it, most likely. And that's it. Most likely in the future, 15, 20 years from now, it's going to be definitely higher than it is right now. That's it. This is the best analogy. If you're focusing on short-term gains rather than long-term goals, it's also not the way investors think. You need to once again think about compounding, like about compound interest. You need to grow with companies. You do not need to give them your money and get them back as soon as they make you money. That's it. You need to be oriented long-term. That's why the earlier you start investing, the better. If you have 30 years ahead of you, 20 years, 10 years, even 5 years, it still counts. You need to start investing basically as soon as possible if you haven't already. And then you need to stay invested as long as possible, because time invested is more than monthly contributions. It's more than initial investment. It's more than anything. Time investment is the biggest thing that grows your portfolio. Okay, next thing, if you're an investor, you should not care about commodities, currencies, cryptocurrencies, anything like this. Like you should not care about oil prices, gold prices, silver. Commodities are naturally for trading. You can invest, I don't know, in Bitcoin and gold. Like some people think it's hedge against the inflation, like stuff like this and this and that, but there is no fundamental value of such things. Investing is investing in a company that will grow with you, that they will use your money to make the company bigger, to employ more people, to do more research and development, to do marketing. But if you're investing in gold, there is no fundamental value. There is no employees. There is no assets. There is no liabilities. Like you trade commodities. You do not invest in them. You trade them. You cannot calculate P/E ratio of Bitcoin. You cannot calculate price to book value of, I don't know, silver. commodities, currencies, cryptocurrencies are for trading. No matter what people say, like gold is hedged about this and this and that. For me, hedge against deflation is investment in real estate. Or if you cannot invest in real estate, it's investment in REITs, real estate investment trust. And these are the things. I will have YouTube video next week about REITs, by the way. This is just simply like mutual fund or ETF, but they're dealing with real estate. And that's it. For me, that's more than enough, because real estate prices more or less grow in accordance with the inflation. So that's it. Instead of hedging yourself against the inflation using crypto or gold, invest in REIT or invest in real estate. Here you go. Here is your hedge, and here is your protection against the inflation, basically. And definitely do not include derivatives in your portfolio. And derivatives are those like stock options, put, call options, how it's called, like binary options. These are definitely not investment related stuff. Options is basically you're betting if the price of the stock will go up or down. And as you can see already from the definition of derivative of an option, you see that this is you're betting against the price. And trading is all about price of a stock, while investing is all about the company, not about the price of the stock, but about the company itself. So options, put, calls, derivatives, like all this kind of stuff, it's all about trading. Don't even put this information, unnecessary information in your head. Don't worry about learning how they work. Just invest in companies, especially better if you're investing in ETFs. Okay, no questions, no people joined. Let's continue. Okay, long-term profit versus short-term gain. Once again, because this is the major focus here. Investing is all about long-term profits, not about short-term gains. You should not care about, okay, your Apple shares are making now $5 per share more, you're selling them, and then you're waiting to enter again. But what if Apple shares just keeps growing? So you sold them for 125, and then like you're waiting to buy them back, you're waiting to buy them back, you're waiting to buy them back, and they're like $150 already. So that's it. You just want to invest in Apple, you invest in Apple, it's 150, and then it starts going down, and now it's 140, 130, 110, I don't know, like stuff like this. You cannot time the market. You cannot extract you cannot beat the market if you're orienting on the short-term gains. You just need to stay invested. Do a dollar cost average, which once again on the same day of every single month you contribute the same amount. For example, $1,000 every 5th of December, 5th of November, 5th of October, 5th of September, 5th of August, every 5th of months, $1,000, and just buying the same ETF. This is the easiest investing strategy. Just use $1,000 every month on the same day, buying VOO or VTI or whatever else you want, like ETFs. And that's it. 2 minutes per month and you are done. Let the compound interest takes time to start working once again. In the beginning, this will not be as obvious. Like that's it, your investment portfolio is $10,000. In 1 year, 10% is $1,000. Yes, it's good money. You just made 1,000 in 1 year. It's good money. But as soon as your portfolio reaches $400,000, this same 10%, it will be already $40,000. And then it's going to be just even more and more and more snowball effect. Compound interest takes place, and that's it. You're done for the rest of your life, basically. Investing is one of my favorite analogies. I think I don't remember who said it, but then Graham Stephan, don't know how to say his name, but I guess maybe some of you heard about this YouTuber about finance. He said that he didn't say exactly the same stuff, but he said the same idea. So, and this is how I see it. Investing, imagine a person, like, I don't know, like from the cartoons, okay? And he's holding this bag full of money. And he's holding this bag, and there's like dollar sign on the back, on the side of the bag, like typical cartoon, like Monopoly guy, for example, with his mustache. He's carrying this bag with the dollar sign, and inside it's full of coins and money. This is an investor who achieved compound interest. He's holding lots of cash. It's all his money, and it's so much money that sometimes coins or like $1 bills, $5 bills, they fall out of this bag. And then there's like traders who are just like following this Monopoly guy and then picking up these coins from the floor. These are traders, because investors, they just compound. They hold their like big bags of cash, big bags of coins, and whatever is falling, they don't even care about, because they have bag full of money, and like 2 coins just fell, and they do not care. They do not. If an investor who is holding bag full of cash sees that he just lost, I don't know, 2 cents, he's not gonna reach it, like grab it from the ground, risking that his whole bag will open and everything will just spill and he will lose his entire portfolio. He'll just keep walking. He has $100,000 inside his bag. 2 cents is nothing for him, because he knows that he'll be just making even more money than to care about these 2 cents. But traders are those people who are just following this guy, and they picking these coins from the floor, this like $1 bill or $5 bill, 1 coin, and they're always fighting against each other, because traders, they compete against each other. But investors, they do not have natural predators in the investing world. Investors, they're all friends, let's say, so to each other. They're not competing against each other. But traders, they compete, because trader who first discovers an opportunity, he is the one who profits the most from this opportunity. But those who are late, these are the people who are losing their money. And so the money of those traders who are late, this money goes to those traders who are the first ones to discover the opportunity. Traders are enemies to each other, let's say so. In like, sometimes, yes, they can be in the communities and stuff, but naturally traders are competing against each other, while investors, they just go together in the same direction, straightforward. Okay, so yeah, next one is how to react when prices go up and down. Most of the times, no action is required. Just like I said with this monopoly guy carrying his bag full of cash, if inside your bag is $100,000, if you lost 2 cents, even if you lost $7, I don't know, you should not stop going forward. You should not stop investing, trying to get back the $7. Just keep going, and compound interest will bring you even more than this. Avoid looking at prices frequently to avoid temptations. So this is what I was saying previously. If you see that Apple, I don't know, you have Apple shares, and then it goes up and up and up and up, and you're like, okay, so like I'll sell now, like, because it's already super high and I want to lock in my profits, and then it just keeps going up. You cannot time the market. Do not buy because price is going up and you have a fear of missing out. Once again, if you see Tesla going up non-stop, like every single day, no matter the news, Tesla always goes up. Don't know how long it's gonna last, but Tesla always goes up for now. Like, don't buy Tesla just because what I don't want to be left out. Like, don't do transactions without your own further research. The last point of this slide, don't do any transactions, either it's buying or selling, without your own proper research. Don't just go and see, I don't know, like the same Tesla, you put it like weeks graph, like months graph, annual graph, and you see it's always goes up and up and up. And you're like, okay, I'll just buy because it will be going up as well all the time as soon as I buy it. It might, but there are no fundamental confirmation why it should do so. And the last thing, definitely never panic sell. Definitely never, like, I don't know, Intel, for example. Yeah, like Intel, for a couple of times during this year, Intel lost like 20% in one day or something like this, and then like 10% in one day. Do not just sell it, because what if it goes even lower? Do your own research, see why it dropped, do fundamental analysis, see if the balance sheet is good, if the income statement is good, if the cash flow statement is good. If everything is good, there is no reason for you to sell. It's just temporary. Like if you're planning to hold Intel for 15 more years, just because in one day the price changed in unfavorable way, it's no way you need to sell it without at least doing your own research before. Okay, I see a question. How often should we relook our stocks or look at selling companies long term? Asked by Gabriel. Okay, so I am personally looking at the end of each day, but I just do it just because me and my father, he is also investing. We just send each other our daily performance. That's it. Let me see once again your question: buy and sell or just sell? Okay, just selling. Okay, so I am rebalancing my portfolio once per month. I'm doing this dollar cost average stuff. Every single 6th or 7th of months, I am buying more stocks using the same $1,400. So if I see First of all, I have this table, and every company in my portfolio, I'm trying to have them at least like 6-7% of my portfolio. Okay, so I want to have every company to have an equal weight in my portfolio. So the first thing that I do, I see companies that have the lowest weight in my portfolio, like for example, companies that have like 4%, and they're supposed to have 6%. So I check the company's financials to see if there are any balance sheets or anything like this. If everything is good, I just buy more stocks of this company just to make it again to be 6 or 7% of my portfolio. If I see a company that is now more than like 7 or 8, like 10%, 15% of my portfolio, like for example, for me, this is just two companies. It's Apple, but because this is I'm not going to say favorite company, but this is the company that I'm definitely believe that from all the companies that I have in my portfolio, this has the company that the best potential to be alive, to be profitable, to be still good in 20, 30 years from now. So other than Apple and other than one ETF, all my other companies are 6-7% my portfolio. And my second company that has more than 7% my portfolio is ARK ETF. But this is ETF. This one investment, it gives me 30 plus companies. So for this reason, I can buy ETF to have, I can have more than 7% of this position in my portfolio, more than 7% basically, okay? So I barely sell any companies, okay? I sold since the beginning of my investment journey. I only sold twice. First company was with oil related company, Marathon Petroleum Corporation, I think, yes. But it was kind of obvious sale because oil was not used. No people were using their cars. So basically it was expected that oil companies would suffer the most. So I got some profit from this company. I don't remember, like 5-10% I got profit from this company, and I sold it because I didn't expect anything good to happen with oil sector in the nearest future. And instead, I bought another oil-related company, but this oil-related company, it was innovative kind of related company. So they were more focusing on oil exploration, okay? So I didn't buy, once again, another oil company. I bought it oil-related, but oil exploration. It didn't prove good as well, and the financials became two quarters bad in a row. So the time when you can maybe sell a company, if the financials of a company are bad, at least maybe two quarters in a row. So, like companies, they publish their financials 4 times per year, every quarter. Every 3 months, they publish their financials, balance sheet, income statement, and stuff like this. So if you see that the company has financials 2 quarters in a row, it's not 100% time to sell it, but it's time for you to maybe do additional research, like why it's so bad. Like it's 2 quarters in a row it's bad, while its competitors from the same sector are doing good. Why this company is not profitable 2 quarters in a row? 2 quarters in a row, it means that the company is not doing good for half a year straight. So it is kind of maybe a signal for you to keep closer attention to a company. So basically, this is the first how it's called, first reason that you might look into selling companies. Okay. Second reason to sell companies who are getting closer to your retirement. This will be one of our future topics, how to basically what to do when you're getting closer to your retirement. But long story short, the closer you are to retirement, the more bonds you need to have than stocks, because stocks are more risky, and the stocks can lose, I don't know, 20% in 1 week, okay? But bonds, they have fixed payments. So bond holders are always the priority for the company than shareholders, which means that companies, even if they go bankrupt, they sell their assets, the first people to receive their money back are bond holders. And bond holders, they have less return, like 2, 3, 4% per year maximum, let's say, so, okay? But these are fixed payments. So yes, closer you are to retirement, you need to start selling shares and start buying bonds. So yeah, you might have less return, but you do not want to lose 20% of your life's work in 1 week. At least you can just be slow and steady. You have your 2-3% per year. Your portfolio is, let's say, so $1 million, and 2%, 3% per year of $1 million is like what, $30,000, if I'm not mistaken. Yes, and this money is like good money, let's say, so to at least cover the basic needs. And $1 million portfolio is more than possible if you start investing. Basically, if you already invest in your 20s, 30s, it's more than possible. The earlier you start, the more crazy number you will get. Okay. So this is the second reason. The closer you are to retirement, you can start selling your companies. And third reason, maybe I would say that if you still cannot get rid of your trader's mindset, which is not recommendable, but I just want to have 3 options for you to choose from. Very not recommendable by me, but still it is an option. Whenever your company in your portfolio, whenever its fundamentals are going down, but price keeps going up, it means that maybe someday in the future, there will be a correction and the company will lose its value, the share price will go down. What it means? When the fundamentals go up, it means when the fundamentals go down, it means that the company's reports are bad. For example, in one quarter it's bad, the next quarter it's bad, but the share price still goes up. So this might be the reason for you to sell, because maybe eventually the market will notice it, the company becomes overvalued, and then eventually there will be a correction sooner or later. You don't know when, but eventually sooner or later, 99% it will happen. And you might exit the position. But once again, this is already trading mentality, better to avoid it. I have never done anything like this, but I'm just giving you an option to choose from. Okay. Thank you. Thank you for question, Gabriel. Very good question. And I'm not sure. Looks like we might have like 1 minute left. So I will keep like half window. So I will not be full window, just in case if the presentation ends, I will immediately restart it. So I don't just speak knowing that no one is listening. Okay, so I'll just keep it like this for now and we'll continue. Okay. And I think it's last slide. So let's see, maybe we'll be even on time. Okay, so next slide is next Teslas. Okay, there was something crazy with my camera. I don't know if you've seen it, but okay. Okay, so next slide is next Teslas. This is the, I don't know, I would not say it's the worst about investing, but this is one of the ridiculous things that even the smart people, they still have this mentality, they still have this mindset, and this is a little bit ridiculous to me at least. There will always be companies of the future. People will always tell, wow, this is so revolutionary. This is the next this is the next Google, this is the next Microsoft, this is the next Tesla. It has always been like this since the beginning of the stock market. It has been like this in 1920s. It has been like this in 1960s. It has been like this in 1980s. It has definitely been like this in 2000s when there was like dot-com bubble. I guess like you both know about this, you both heard about this, maybe some of you even experienced this, when everything related to the internet was explosive, just like right now, everything related to electro cars. So if you remember 2000, if your company deals with internet, your share price goes up like crazy. Now everything, if your company deals with electric cars, your share prices go up. It's history repeating itself. Eventually this will collapse. I don't know when. It might take 1 week. It might take several years, 2, 3, 4, 5, maybe years. I don't know when, but eventually it will collapse. So that's what I'm saying. All these people who are saying like Neo, I don't know, like buy Nikola, buy Neo, buy Tesla. It's always been like this. In 1920s, it was about railroad companies. There was a bubble, I think, or something in railroad. I don't remember, but something like this. It used to be in the past. In 2000s, it was about internet companies. Now it's about electro cars. It is exactly the same. And those people who do not know history, they tend to repeat it. And this is what will happen. Like I said, 1 week from now, 5 years from now, it will happen. And all these people who are Tesla share owners, they will be selling their Tesla shares and they will justify, well, now it's this, well, now it's that. It is like it's companies cannot grow 600% plus per year forever. Tesla got like 669% since like 1 year from now or something like this, if I'm not mistaken. It will not be sustainable. Like what do I invest in Tesla? Just I buy 1 share and in 10 years I'm a millionaire. It's not going to happen. Eventually it will slow down. Eventually, when it slows down, people will start locking in their profits, which means that they'll start selling shares. And as soon as they start selling shares, because majority of Tesla investors are Robin Hood boys and people who just like Elon Musk, as soon as they see their Tesla prices collapsing, they'll be panic selling. I'm almost sure this is what's going to happen with Tesla eventually. I don't know when, or maybe it will never happen. Let's see. But as soon as I think that people will start locking their profits, then Tesla boys will start selling their Tesla shares as well. This will be like avalanche effect. This will be like snowball effect, and Tesla will be, I don't know, it will lose like 50, 60, 70, 80%. I don't know. Let's see. Maybe it will never even happen. Maybe it is the company of the future, the one and only, but most likely it's not going to be like this. So I think that's why I do not invest in Tesla individually. I have ARK investment. It has Tesla in it, but I just like the idea of this ETF because it invests in innovative companies. And besides Tesla, there is 30 more companies. So like what, I do not invest in an ETF because it has Tesla? No. Like I invest in this because it has other 30 different companies which can be even better than Tesla and that are definitely not that much overvalued as Tesla. So that's it. I don't invest in Tesla, and as long as it's not going to lose like 80-90% of its value, because it is ridiculous. One Tesla company is more valuable than all the other major car manufacturers combined, and this is just ridiculous. And a lot of people keep their Tesla shares, and this is their mindset. Well, if the shares of company are growing, it's a good investment. So it is pretty ridiculous statement to make. If the shares company are growing, it only means that there are more people buying these shares than those people who are selling these shares. Simple as that. It's supply and demand. It does not mean that the company is good. It does not mean that investment is good. Because yes, company can be good and Tesla is a good company, at least what we see right now. Yes, but as an investment, it's terrible. And all these people saying people are asking, I've been watching some interviews about finance people on YouTube, and they're like, are you planning to sell your Tesla shares? And he's like, well, I'm not gonna sell them. Like they're growing. I like them. Or like, well, I'm not gonna sell them because I know the company is good. Like I'm not gonna sell them. I'm also almost sure that as soon as Tesla will collapse, I don't know when it's gonna happen and if it's gonna happen, all these people who are saying right now that I'm not gonna sell my Tesla shares, never, they will be selling Tesla shares and they will make lots of YouTube videos selling Tesla shares because this, selling Tesla shares because that. Like you never know this about Tesla, you never know that about Tesla. Selling Tesla before this, selling, and they will be justifying why they sell it now, while 2 years ago they were saying that they will never sell their Tesla shares. You will see. Like, I don't know. These are just my predictions. Everything about the stock market is predictions and assumptions. This is how investments work, but this is my own way of thinking about Tesla and everything. And so yes, what's next? And investing in next Tesla will not be 90%. This will not be the same 99% of the times. So if people are looking for next Google, next Microsoft, next Apple, next Tesla, and they're investing in some Chinese startups, in some Indian companies, I don't know, and they think this is going to be next Tesla, 99% of these companies will not be even close to Tesla, to Google, to Microsoft, to Apple. They might have some degree of success, but they will never, almost never, less than 1% of these companies can achieve something similar to our leading companies in respective industries, basically. So don't be tempted by Tesla or any other similar companies. Be very careful about electric cars industry and sector as a whole, because this is exactly the repetition of 2000s. This video will be saved on YouTube. So today is December 23rd, 2020. Let's see how long it will take until my words come true. Maybe they will never come true, maybe they will. Let's see. This video will be on YouTube. And if it happens, come back to this video, watch it again, and see how many points I got correct. But I guess basically that's it for now. I hope you got the idea. Do not get tempted. Invest in long term. Think about investing long term. Think about investing in good companies. Have proper mindset. Invest. Don't be everyone on YouTube, on Instagram says how I made 20% in 1 week. I don't know. My portfolio grow 50% in 1 day. Yes, it's good. Congratulations. You can be jealous of them, but do you see posts when they make, I lost 70% of my money, I lost 20% of my portfolio, I invested in company that it went bankrupt? They never do posts like this. So all they do is just show their winning days. But I'm sure that half of their trades, half of their investments, maybe even more than half, are not that profitable. So in the end, they are just like us. They have 50% in one company, but they have minus 40 in another company. Here you go. like they're just like us. Don't be tempted. Be slow and steady. Investing is a marathon. You need to finish 10 kilometers, 10 miles marathon. And you do not need to run first 100 meters as fast as you can so that you're then exhausted, you're tired, your legs hurt, you cannot run anymore, and you don't finish marathon and you just quit. You need to finish marathon. So take it slow, start jogging, start walking, be slow and steady, and eventually you will reach the end of this marathon. You will have your $1 million+ portfolio. You will retire in wealth, and you will just laugh at all these like people who are saying that trading beats investing or anything like this. And basically that's it for today, I would say. So if you have any questions, let me know. I don't know what happened with Zoom. It's not restricting me anymore for.
Maybe it's because Christmas, perhaps.
Maybe, I don't know. It's not restricting me anymore.
There's a lot of families that might be doing Zoom Christmases, so they might have lifted the restriction for the week.
Maybe.
Perhaps.
Let's see. Hopefully, it stays the same. So,
I got a question. So we were talking about the EV market being hot, talking about NIO and Tesla and Nikolai and all those guys. What my solar TAN ETF is doing really, really well. Do you think there's hype there in the solar industry, or do you think it's doing well for good reasons?
Well, solar industry, it's kind of what like renewable energy related, and renewable energy, it is like, it makes sense. Like electric vehicles, electric cars, yes, they also make sense. The idea of those things is basically to stop using that much fuel, to stop polluting the earth. The idea is good. No questions asked. The same with the solar industry. It's renewable energy, not too much pollution and stuff like this, if any. The idea is good. It's just that the hype destroys the whole industry, destroys the whole sector, makes lots of fake companies like Nikola to appear, to just steal money, then to just disappear. The idea is good. Solar industry is definitely not that much overvalued and not that popular as electric vehicles sector at all. So yes, in the meantime, I have some solar companies on my watch list, but I was not keeping close attention to them. But I'm more than sure that the valuation of the whole sector is more or less something that makes sense. So which means that technically speaking, logically, and you know that stock market is illogical, but logically, solar industry is something that's going to be like sustainable, something that at least while it's not that popular yet, you might like get some good returns from it and everything like this. You need to be starting paying closer attention and be extra careful when it starts to be as popular as electric vehicles. But yes, but in my opinion, I don't think there will be two sectors equally popular at once. And also, I don't think that maybe as soon as electric vehicle sector collapses, I don't think that solar sector will take its place immediately. Because as soon as there's like big recession, as soon as one sector collapses, investors, they're very, very careful about new bubbles. So most likely, it's not going to be two sectors at once. Most likely right now it will be just electric vehicles. Maybe eventually it will collapse, and then it will take maybe another 5-10 years for investors to again grow confidence and start growing another bubble in another sector, which might not be still like solar industry, which might be something else. So I would say that solar energy is very good for now. So let's see how long it will be sustainable.
Yeah, I looked at your watch list, and then I saw some of the companies on there that were in TAN, the ETF. And the next day I bought it, and I got in like at 70, and it's like up to 100 right now. So I mean, I'm up pretty good, and I'm like, yeah. But I didn't know if it was like like more based on sound business and valuation versus hype, you know, and what was going on there. So you did a good job answering my question for sure.
Yes.
Thank you.
I think it's much better than electric vehicles, and I will even take a look myself in solar industry later.
Well, TAN's been nice to me, man. It's been good to me, so I like it.
Sounds good to me to start researching.
Yeah, the expense ratio is a little high, but other than that, That's my one gripe. But it might maybe not a good with how high it is, like a good really really long term investment, but on the shorter term it could be nice. So
Okay, got it. We'll take a look.
All right. Well, hey, enjoy your time down there in Colombia, my friend.
Thanks so much, Travis. Thank you.
Yep, Gabriel. See ya.
See you.
Yes, thanks, Travis. I'll see you again. Have a good time.
Yeah, Merry Christmas, everyone.
Merry Christmas. Thank you
Same
for
to you
joining.
guys.
Any questions, Gabriel? No, I saw you're unmuting yourself.
Oh yeah, no, I just wanted to say I found QCLN is a good ETF for like clean energy stocks, which includes solar. It seems to be doing pretty well.
Can you type in the chat the name of the ETF? I will also put it down on my watch list and I'll take a look at it.
Yeah, sure, we'll do.
Gabe, do you hold positions on that one?
Yeah, I've got quite a bit, but I've got a number of shares in it.
Yeah,
it's been doing pretty well, and if you look at it, how it's been doing over the last several months, just a couple of years, it's been doing pretty well.
Okay.
I don't know how long it's been
around. I think I hear that one mentioned a little bit more than TAN, but they're both right up there in the conversation. You always hear them two together.
Okay.
I'm gonna check out the one you mentioned though. I haven't looked at that one specifically.
Perfect. I will take a look at both of them too. And it's way better that we suggest each other ETFs rather than individual companies. So it's much better in my opinion, because when you're picking individual stocks, it's like, I don't know what's called in English, like cherry picking or stuff like this. So it's like, yeah, you might get successful and everything. But if the industry is promising, it's much better, I think, to just invest in ETF, and you have more chances, maybe not to explode, but still to have good growth and everything like this.
Yeah, I agree.
Well, I need to get my exposure up to some wind and water too, so I might be picking up some of those units, Gabe. So thank you for the suggestion.
Yes, very good suggestion.
I'm gonna go check out TAN. I need some more of that.
Okay.
It's a little bit more focused, but that can be nice in a portfolio as well.
Okay, awesome suggestions.
Later, boys.
Yes. Thank you.
Have a good one.
Thank you for joining. Happy holidays. And by the way, Gabriel, next week, unfortunately, I won't be able to do it because I'll be in another small town in Colombia. So there will be no internet. So unfortunately, next week, most likely no Patreon updates, no news, and no meeting, definitely. So basically,
everybody needs a break. You included.
That's healthy. Yeah,
okay.
Well, I'll see y'all in 2021 then, all right?
Yes. See you.
Sounds good, guys.
Bye. Bye, everyone.
Cheers.